Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of July 20th, 2026. Let's get started. SEAF signals for this week. We roll in, continue with financials, which is now pretty high ranking with an overall ranking of 4. And then we pick up healthcare and real estate with a little bit of those higher rankings at 11 and 15 respectively. Again, large collection of the 11 sector spiders sitting in that neutral category, and then communication services coming in last here, dropping in with an overall ranking of 27. We continue to see money outflow from our technology, which is being held into neutral by its 1 on the strategic quarter, with still a large amount of accumulation for during that time period. Heading into our heat map, just kind of wanted to highlight here, financial showing some real strength. So outside of technology, we aren't seeing a ton of accumulation here on the strategic quarter in any of the positive sense. But technology is still showing some strength here. Outside of that, our top ones here are starting to build up accumulation. We've had a couple of weeks where we've seen a little bit of relatively rapid movement, and that'll highlight itself in some of the rainbow charts here. But like right now, we're back to being a little bit on the defensively skewed side of things with healthcare and real estate, and even with financials being up here toward that top. Energy coming in with a week of 2. We've seen a little bit of extra flows coming into energy as of late, and it does show that positive skew. We're going to highlight that in a minute with one of the rainbow charts, but this strategic quarter is holding up the overall ranking a little bit on energy, as energy tends or starts to accumulate some asset flows. XLF coming in at 0.52 on the week. That's significant. So this is really starting to become a nice strong trend that I'll also highlight in the rainbow chart in just a minute. Energy coming in at 2 at 0.38. So that's relatively significant, especially for a number 2 on the trading week, as we're starting to see some flows kind of come in that way. And then again, technology continues its kind of downward slide here with a negative 1.26. Overall, we were down on the week. 3 of 5 days were down, and we had an overall total outflow for the 11 sector spiders at negative 0.81%. So not quite a 1% move, but again, 3 of 5 down days. As you can see here, we're renegotiating. This is our sector AUM chart. We're total spider sector AUM chart. We're renegotiating the 21-day moving average. In general, this indicator has done a pretty good job of keeping you on sides when it's trading above its 21-day moving average. The S&P 500 has an opportunity to, it's either sideways or up in general. This isn't a hard, fast rule. When it's below its 21-day moving average, the S&P 500 is sideways to down. Still treating ourselves a little bit above that 21-day moving average, but again, coming in for a negotiation. And as you can see here, as we've been negotiating this 21-day moving average, S&P 500 has mostly been sideways. We've had a little bit of spurts down, a little bit of spurts up, but after that long run coming out of late March, early April of this year that we had, we've been really sideways since the end of May, early part of June. And we've, as you can see here, that's when we've been negotiating that 21-day moving average in terms of the total sector AUM assets. Heading into our rainbow charts. First up is our financials chart. And as you can see here, we have got ourselves up into that, especially with that trading week, have really accelerated ourselves up into that higher favored overall ranking score of 4. Only missing the quarterly number, which is still going to technology after that massive accumulation we had a couple months ago, but highly favored now here for financials. And as you can see here, it's really starting to show up on that relative outperformance versus SPY. As we went from avoid neutral into favor, that acceleration has continued, and we got this nice strong relative outperformance after what had been really a down calendar year overall. Relatively underperforming SPY, obviously having a little bit of bursts here and there as we've eked into favored a couple of times, but overall spent a lot of times in neutral. And during that neutral phases, we get those negative or those underperformance to S&P 500, but right now we have that nice strong move as we kind of touched on that bottom here and have taken off. And again, with the significant numbers of cash inflow for financials, overall looking really strong right now. Energy is next. I wanted to highlight energy briefly, just to kind of show here what we're doing. 11 to 6 to 2. So we got that positive skew that I like to see. But overall, trying to come off this bottom here, you could kind of draw in a line and see that we got a little bit of support going back to late last year. But really, again, energy has been geopolitically natured. Are we at war? Are we not at war? Is the strait open? Is the strait closed? And how much of that oil is coming through? And what the oil shocks are looking like. So as of right now, showing a little bit of trendiness, but you can see here we've been really kind of up and down. We had that nice long run up from January through the end of March, where we stayed in that upper favor and had that really significant relative outperformance versus SPY, and we've been teetering up and down ever since. And again, this is a lot to do with what is being said via tweets or via truth, and what the message coming out of Washington has been, which has been relatively inconsistent. And you can see that here on the energy chart right now. Heading into our next rainbow chart, we're looking at healthcare. Healthcare's been interesting. I think as the market has been, and I'm going to pull up this chart just because we have this bottom chart is the S&P 500. As we've had these little as we've been sideways and had these little slight, even corrections, probably the wrong word, but slight downward movements on the S&P 500, we've seen healthcare spike up. There is obviously a collective of investors that are waiting to get themselves into healthcare and believe healthcare might be of a value, especially if the market is generally down. And you can see we've had these little spikes too, where we come up into favored, money rushes out, come up into favored, and money rushes out. It is one of those situations where I think, we have some people trying to take some lead-offs on what they see to be maybe a broader trend. I wish I had a bigger chart here, but, overall healthcare has been underperforming the S&P 500 really going back the last couple of years with, some brief stints of relative outperformance. But we do have a nice upward trend. Again, it's a little bit jagged. It's not a straight up line, but it's moving up in the right general direction. And we're back into healthcare. So, things are overall looking good. I would like to see a similar move that we had in late third quarter of last year, where we had some sustained spots in that upper middle favored and got some nice strong relative outperformance. But again, we're not projecting or projecting cash flows in any way, but we are seeing a positive trend. While it is a little bit jagged, attempting to come out of this avoid and stick into neutral. As you can see here, these amplitudes have slowly shifted up. So hopefully our next move is up here to that upper favored and we pick up that nice strong relative outperformance. But we'll have to wait and see. Wanted to highlight real estate. Real estate is really benefiting of really just being consistent more than anything. We've been sitting in that middle to lower favored, even, lower favored to upper neutral for quite a bit of time here. And again, as money's been really kind of rapidly flowing in and out of certain areas, is I think, investors are in general, and I'm going to bring it up one more time just for fun. We've been sideways for a little bit. Investors are trying to figure out what's going to happen next. And these sideways markets are probably the most difficult thing to try to ascertain what's next, because you're kind of sitting on a lot of moving averages. You're kind of going neutral. Any move downward looks scary, like you're falling off a cliff, versus a slight correction and upward pattern. So I think being in real estate it's been relatively stable. Not a lot of whipsaws here and there. Again, being consistent, and sometimes for the SEAF model, being consistent, getting cash flows versus getting these spikes is somewhat of an advantageous thing. So happy to be in real estate right now. Last but actually least, not quite. XLC is least. Technology is second to least, being held up by that one in the strategic quarter. But we're seeing, kind of some weakness here. We had some real strength coming in, where we really saw that high drive up from April through June, where we just really strong relative outperformance in technology as we took that next leg higher. continued rumblings of a potential bubble in AI hasn't really shed anything yet. Some trouble that some of the AI companies are getting in in terms of copyright and some other circular type deals. I think there's some hesitancy in the overall technology space right now, just trying to figure out is AI going to be able to take over white collar work, or is it really just a productivity tool? I think there's a lot of to be determines that are scaring some investors here, and as you can see here, we're starting to trend in the opposite direction to relative underperformance versus SPY, kind of floating in and out here in terms of favored to neutral, but headed in the wrong direction toward a void. It is toward the bottom of our rankings, because technology has now had a technical month of 11 and trading week of 11, and like I said, it was negative 1.26% outflow on the week. So right now technology is a place to avoid. We'll see how it resolves itself. So we're in that kind of middling period, and it has to do with us being in a bit of a sideways market in the S&P 500. A couple of good news stories, and about how AI is revolutionizing how businesses are doing business, and this could be back up into upper favor in a second, or continued pessimism on how these are really going to get integrated into old systems, or how fully companies are going to dive into the AI trend. Could send this thing continuing down, or the bubble could burst. Again, the key thing with SEAF, though, is we're not trying to speculate. We don't want you guys to get, crossed up on all the different headlines. All we're doing is tracking the money. And as of right now, money is flowing out of technology. So no matter what the story is behind it, we know money's flowing out. We can see that it's starting to relatively underperform the S&P 500. Kind of that's where we are. So that's all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.